A gradual economic reopening from the relaxation of China's dynamic zero-COVID policy remains as its main catalyst. The uplifting of COVID restrictions will lead to a rebound in service activity and consumption as pent-up demand are satisfied, which will improve employment and income growth. Amidst the current high unemployment, restoration of job security and income will set the pathway for a rebound in the domestic private consumption, which will be a key growth driver for its economy in 2023. As of late, there is more clarity surrounding the reopening with China's recent optimization of its zero-COVID policy in November. This represents a clear signal of the government's renewed prioritization on the economic growth going forward. Recent events have also highlighted other than the economic costs, social costs and political costs of continuing the zero-COVID policy is increasing. While the path towards reopening will no doubt be a bumpy one, we believe it will eventually take place as the benefits eclipse the stimulus measures announced by the Chinese government. Recent events have also highlighted that other than the economic cost, the social and political costs of continuing the zero-COVID policy is increasing. While the path towards reopening will no doubt be a bumpy one, we believe that it will eventually take place as the benefits eclipse the stimulus measures announced by the Chinese government. In the last 2 years, the performance of all major China's indices have since decoupled from global peers, with large bounds of correction stemming from a regulatory reset for certain sectors of the economy and bond defaults by the private property developers, in addition to the escalation in geopolitical tensions. The sell-off since the beginning of 2022 was largely driven by macro weakness from the country's zero-COVID policy and the drag from the country's weak domestic property sector. Economically, growth has stalled in the second quarter of the year after the Shanghai lockdown in May, with the recent third quarter GDP growth at 3.9% showing a marked rebound from the 0.4% registered in the previous quarter. While the fourth quarter GDP will likely see another quarter-on-quarter on the back of rising number of COVID cases, recent policy shifts and measures rolled out will help stabilize and shape the bottom of the Chinese economy and capital markets. At the end of November, the MSCI China Index was trading at 10.3 times its 2023 fiscal earnings, below its 10-year historical average of close to 13-fold. Despite some lingering near-term uncertainties, companies' earnings are stabilizing and valuations are set to rebound from here.